You're paying the IRS way too much money, and if you watched my content, then you know that the more you know, the less you owe. The problem is you never learned the basics in school. So today, we're going back to the foundation of tax, the stuff you should have learned in grade school, and I'm gonna make it so simple that my 3-year-old can teach it with me.
That's me! I thought I would be a tax attorney.
And I'm Jasmine DiLucci. I'm a tax attorney, CPA, and enrolled agent. I got my first tax license in high school, and I thought that was too late in life, so my daughter started learning tax law when she was 2. So let's go over the 5 simple reasons you're overpaying the IRS.
You order X-ray write-up.
We've all been there. We see the social media tax advice. We see the hype. The problem is that this hype around using real estate as a tax shelter has been around for many decades. Okay, so Congress has since put all of these hurdles in place. You want to understand if you can actually use any real estate depreciation and losses that you have before you start celebrating, which includes making it past 3 important hurdles. Okay, passive loss limitations, at-risk limitations, and basis limitations. And while all of that is technical tax jargon, it is so material to your tax due that you don't want to miss the mark here. Okay, we hear about short-term rentals and real estate professional status because they can help you get over the passive loss limitations, but they come with so many requirements. And overestimating your real estate write-offs is one of the biggest areas where people get completely off track and get the bad news once their return is prepared.
You don't do X-ray taxes.
None of us want to pay the IRS, okay? And with smart planning, sometimes you don't have to. Maybe you buy enough real estate and you actually meet the requirements to get a huge benefit. But unless you've wiped out your entire tax bill, you probably still owe estimated taxes. If you don't make those payments, you'll end up paying the IRS more than required. And here's the catch, okay? The IRS charges daily compounding interest, and you don't get the bill until after you file, when the penalty notice shows up in the mail.
You got bad records.
You commingle your business and personal accounts. You don't keep actual books in an accounting software, or you don't keep your receipts organized and electronically attached to each transaction in your accounting software. Okay, to take deductions, you need to actually keep track of what is legally deductible and keep support for what is legally deductible. Remember, audits are guilty until proven innocent, and a bank or credit card statement is not sufficient proof. And this is probably the biggest area that I see issues with for smaller businesses and especially real estate investors, because they miss out on deductions they already have and lose big time in IRS audits, even with completely legal deductions, just from a lack of basic planning and organization.
You got no IRS transcripts.
IRS transcripts are my favorite, okay? They are so simple to pull, yet almost no one uses them, okay? Not even accountants. Transcripts show you exactly what the IRS has on file for you. Okay, the same information that they use to auto-calculate extra tax, penalties, and interest for some IRS notices. Okay, so why would you ever file a return without checking them first? And of course, that's why I built a full training on transcripts inside my free community. Checking your IRS transcripts is so foundational, it's completely free.
You don't have your kids.
Exhibit A, my daughter. She's 3, and yes, she's actually making this video more valuable. Tax law apparently can be dry, and I wouldn't know, but I need to keep your attention. Okay, nothing does that better than a real 3-year-old aspiring tax attorney. And here's the point. It's not a red flag. It is not illegal. The IRS just requires that the work your kids do is real and with genuine value. And my daughter is actually contributing valuable tax content like this. So if you own a business and you're not paying your kids for legitimate, valuable work, you're overpaying the IRS.
Subscribe to our tax law.